Oh, hi traders. This is just me predicting the outcome to the Yankees Twin Series today. It's going to start in a little while because you know why this broom is out? Because the Yankees are the best team that money can buy, baby. And they sure did spend enough on this crew. And I say they're probably going to win tonight. And with that in mind, let's get right to the analysis here because the game's going to start in a few minutes and I want to go see it. Traders, this video is a weekend webinar. It is being filmed on October 11th for trading October 12th. Traders, right off the bat, remember this. Columbus Day here in the United States. Banks are closed. The bond markets are closed. And Japan is closed for their own reasoning. So we are going to do this. We're going to take a neutral approach tonight in the evening market, Sunday night leading into Monday. And we're not going to trade till Monday. And then we'll see if the market hits the Omni sweet spot. If it sets up, we'll trade Monday during the trading day. I think with banks closed and Japan closed, tonight's session is going to be way too thin for trading. And I don't want to put the Omniacs in such a thin market because when you have banks closed and you have the bond market closed, you're susceptible to a stupid move in a direction that's unexpected for no reason whatsoever because there's not a lot of players out there. So do yourselves a favor, take tonight, Sunday night off. We'll trade Monday during the day if in fact there is a setup. With that in mind, traders, I would like to show you just a few charts in this webinar. Again, I want to get out of here and watch the Yankees. So let me show you a few charts. I think what you'll see should keep you on the bull side of the U.S. indices. With no further ado, let's go to some charts. Okay, traders, what we are looking at is the December S&P daily bar chart, or the ESZ9, if you will, for the mini. Traders, this market has cleared the bull flag, flagpole, flag, got above it, and we're here. Now we need to get back into the bullish parallel channel illustrated by these red lines. Now, many analysts would look at this and go, Oscar, oh, no, you got out of the bull flag, but now you're running into resistance here, and it's going to break and never get back into the bull channel, right? You would think that. But if you hang around an analyst like me, you know to go look at what the leaders are doing before you decide what the follower will do, right? So with that in mind, bull flag, broke out of the bull flag, needs to get into the parallel channel. If in fact the leader is already up into the parallel channel, well, that would tell us that the likelihood is the S&P will follow, right? Let's go look at the leaders, traders. Okay, traders, the secondary leader, the NASDAQ, one of the leaders, of course. The second one, the major, the big leader would be the Dow Jones Transportation Average. But this is the NASDAQ December daily bar. The leader gets out of its bull flag, never even gets under the parallel channel on Thursday or Friday last week, is in fact back above the parallel channel, and that's important. NASDAQ leading, comes out of the bull flag, gets above the parallel channel, and now is poised to move higher. So if we're trading S&P and we think NASDAQ and transportation averages are the leaders, well, then they should look like this, or the S&P should look like this very shortly, right? That's NASDAQ daily bar, back in the parallel trend, hopefully something that the follower will do. Now let's go look at the big kahuna, the Dow Jones Transportation Average. Okay, traders, what do we see here? A bull flag, and a big long bull flag has been broken out of to the upside. Here is the really important thing. The leader never breached its parallel channel. Stayed above it the entire time, bounced off the bottom of it, got above the bull flag, and is all the way up to here right now, and we should move higher this week. Look at that, traders. The leader never even breached its parallel channel, got above the bull flag, is here right now, and this is what we're expecting to happen. Maybe end up here very shortly. Traders, do your homework. Always follow the leader if you're going to trade the indices, and always trade with stops. Now, of course, traders, if this turns around and breaks and gets under the parallel trend line and we have to become sellers, well, that's why we're wise. We're day traders and we use stops. If you have a stop in, you're not going to get tattered too badly if, in fact, the leader starts leading the S&P lower. But that's not what we have for now, traders. We'll erase that arrow because what we have is a breakout above a bull channel and, or I should say above a bull flag, and maintaining the support inside of a bull trend channel and a parallel no less. I like it, traders. I'm going to follow the leader. I like the fact that the transportation average is taking us higher. Do your own homework on the indices, traders. Make sure you recognize this channel for what it is and how the leaders stayed above it, and see if you agree with my analysis. Let's look at one more chart here, traders. Because I've been showing you the sugar head and shoulders in the last 3 videos, let's take a look at where it is today. Okay, traders, a very familiar chart to you by now. The sugar daily bar chart, March 10 is the contract. Traders, we showed you the head and shoulders when it ended here. Then we drew what could be a head test. The market did the head test. It failed. Then we talked about the downside. Look at how well that has worked. Shoulder, head test, failure at the head, breakdown. Now, traders, we are lower than the right shoulder. And if we stay lower than the right shoulder, the likelihood of our projection all the way down here is going to be met. We're looking for this to get below 20, somewhere in between 19 and 18, based upon the head and shoulders projection. Market settled at 21, 24, so you have a bit of a drop coming your way if in fact it wants to continue in this fashion. Great trades came off of this chart. Great homework that we did on it, and a fantastic lesson for you traders who are looking at head and shoulders patterns. Head and shoulders, test of the head. If it fails, you get this. If it breaks above the head, you get that, which is continuation pattern. This looks to be a topping pattern and not a continuation. Do your homework on sugar, traders. It is a dangerous and thin market. Always have stops in. Place your stops very wisely in this market if you're going to trade it. And come on down to www.livewithoscar.com and we'll give you some tips and tricks on how to trade the sugar. So, traders, you see those charts, you see what the indices are doing, and you see what the leaders are doing, traders. That's what's important to me. I'm not so concerned on a day-to-day basis just what the analysis looks like in the S&P. I'm concerned what the leaders are doing, so it confirms my analysis in the S&P, and you should do the same. So make sure that you're following the NASDAQ and you're following the transportation average if, in fact, you're going to trade S&P. Again, that sugar trade is, I took it off the board. I did say sugar here before we started this video. The sugar trade, so far, what a great lesson in head and shoulders. Please make sure you review that lesson and know how to handle them when you see them for yourselves. I still like the downside in sugar. I'm a seller of rallies unless we get all the way back above that shoulder. Let's see what's going to happen. All right, traders, I don't want to do much more because I want to get out there and I want to watch my Yankees, baby. Let's go and sweep. I should put this on the broom and fly it around. All right, traders, let's see what's going to happen. Give me a call anytime day or night, 702-629-4755. And a side note, guess what video this is, guys? Does anybody know? This is our 500th YouTube video, baby. Yeah! We got 500 of these and about 130 classes on top of that at our site. So make sure you come on down to www.livewithoscar.com. Watch the videos, watch our on-demand classes, and jump into our free chat rooms. All right, traders, I'll see you after the Yankee game. Give me a call up there at 702-629-4755. And don't forget, keep your emotions out of trading. One of the best things you can do about that is to say this to yourselves every day. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.